After the Great Recession, central banks quote-unquote printed a lot to the tune of $85 billion monthly at the height of QE over in the United States, and even more at the height of the European Union's easing program, with many fearing that a currency reset was just around the corner. The same way, the Bank of Japan has been engaging in unorthodox monetary policy since the 90s. Fortunately or unfortunately, depending on whom you ask, currency reset fears didn't materialize, at least thus far. To combat the economic crisis the world is dealing with in 2020, central banks have made it clear that they intend to be even more aggressive with currency reset fears resurfacing. Are currency reset fears more justified in 2020? Yes. Does this mean we'll finally get a currency reset? Well, no, not really. What we need to understand is that currency resets shouldn't be viewed in an arithmetic manner, something along the lines of, if the monetary base reaches X dollars, a currency reset occurs, so let's just keep it at X minus 1. Because by doing that, you'd be overlooking the elephant in the room: confidence. Simply put, a currency reset tends to be necessary when market participants lose confidence in a certain monetary system, with it being necessary to transition to a new one so as to get everyone on board again. Therefore, as frustrating as it may be, we just don't know when or even whether or not a currency reset will take place. Far more things than people realize are driven primarily by confidence, and as long as that confidence remains in place, the status quo persists. As such, if the market accepts 2020's measures, we're good to go for yet another cycle. Be very careful when trading against a market you consider irrational by, for example, short selling, because, as the saying goes, the market can remain irrational longer than you can stay solvent.